Okay, this is how I lost $1,579 day trading in Q yesterday, January 5th. Today is January 6th, but I'm recording this trade recap the day after this trade. And one thing I want to acknowledge before this trade recap is obviously I sized up on this trade more heavy than I usually do, almost, you know, doubled my size that I usually trade. I came into this year wanting, and I do come into this year wanting to size up more, and I will continue to do so. But with that being said, let me jump into the recap here. So this is our 4-hour chart. Let me zoom out a little bit on both indexes so we can kind of see what we're working with here. So what we see here is we have a big bearish SMT on the daily. And what that looks like is this level here on ES, you can see that we swept it and we're getting a push down. On NQ, we made a push up nowhere near this high here. And ultimately, there's a bunch of these highs stacked up on NQ. I have them marked from weeks ago, but NQ did not get anywhere near this high that ES took out. So that alone gives us a bearish SMT. So off this bearish SMT, the sweep of liquidity on ES, we see a big push down. And then what we have going on, what looked like to me yesterday was a retrace. And then I was looking for some sort of continuation coming into the day. So that was my initial bias. And I'll show you more. So what we have that continues to stack up. So obviously we got the sweep of liquidity up here on ES, right? And we've made this move down. Now with this, after we made this big push down, we're getting a little bit of a retrace. And what we have at open, or not at open, but coming into open, is we have a new week opening gap on, because yesterday was Monday, that's when I took this trade. And we have a bunch of low resistance hourly liquidity stacked up with session levels on both indexes. Both indexes. We have a gap here. We have Asia session low with this hourly low, with this London low, with this mid London session hourly low, with this London session hourly low. So bunch is of low resistance liquidity to the downside on both indexes. So paired with the fact that since we had news yesterday at 8:30. No, I don't know. No, we did not. At 8:30 was the pre-market New York session open. And from New York session pre-market open, we've just been grinding up all the way until the session opened. So from 8:30 to 9:30 when market opened, we've just been in this grind up. So that alone kind of signals that we're going to retrace somewhat during New York session open. But also we can see that paired with the daily SMT, we also have an SMT with yesterday's high of day. What that looks like, as I drop down here to the 15-minute, is, and this is me just analyzing price as the market opens. Okay, so this is our 945 candle. This is our 945 candle. So we can see big imbalances here on the indexes to begin with. We have ES comes up, market open, sweeps at this daily level here. Get rid of that. This is yesterday's high of day. Whereas on NQ, we're still hovering way beneath it. So that alone gives us dual SMTs. We have a high time frame daily, weekly SMT, and now we have a SMT with yesterday's high of day. So once I saw that exactly at market open, paired with the fact that there's not many remaining draws on liquidity to the upside on indexes, except for this level here on ES. Let me go ahead and mark it. 51.5. So that is an extra on liquidity on ES. Is this 51.5 level here, and then we have all this chop. So not many levels to the upside on ES, and we're already extended. In Q, this is a high resistance high. This is a high resistance level here, because this is just very far away to be a take profit one for NQ. So if we were looking for longs, it was not going to be on NQ, or I was not looking for it to be on NQ. If we were going to take a continuation trade, it would have been on ES, because it came up and got decently close, 7 points away from this high. But nonetheless, I'll drop down here to the 5 minute, and I gotta scroll back a day, and we'll dive into this a little bit more. So, market open, first 5 minute candle. What we have is ES coming up, taking out this level. So this is where our SMT level's drawn. Let me go back and look at NQ, pull NQ's 5 minute candle up as well. Okay, so here is NQ's first 5 minute candle. Here's ES's first 5 minute candle. We can already see big imbalances here, or a big imbalance here on the indexes. NQ is hammering short. ES is poked above yesterday's high a day and is approaching this hourly level up here as well. But as we had mentioned, we have two SMTs on the higher time frame pointing us and showing us that price wants to go short. And that is what I wasn't focused on it, but I was placing more emphasis on the higher time frame SMTs. So what this looks like is we get a 5 minute break of structure short on NQ at open on the 5 minute candle open. Now this is 5 minutes and open, so we have to be a little bit more cautious for when we get our entry. So that 5 minute break of structure alone I was not going to take entry on, but what I do is wait till the macro. We get to 950. Now what we have is at open we get this break of structure down, and what we do is we come down, and I told myself, I said, I'm not going to take an entry on this 5 minutes and open. I need to see more develop. I told myself, I said, if ES comes up, gives us a 5 minute SMT as well, and NQ stays hovering, around equilibrium, I'm going to take shorts. I'm going to take shorts all day. I'm going to take this entry every day of the week. But what we have beforehand is a SMT where NQ comes down, takes out this 5 minute low, and ultimately ES does not. I mean, ES is way down. This 5 minute level's here. I mean, we're still hovering, way up here. And what that looked like to me is this SMT here was going to form to allow ES to make a new high of day, which is what it did. So after we put in this SMT here, it allows ES to go up and make a new high of day. So now we have a 5 minute SMT as well, from this low down to this low here, from this high up to this high. So we have our weekly / daily SMT. We have our previous high of day SMT that we had just seen, where ES come up and took it out at open. And now we have a break of structure on the 5 minute on NQ, multiple low resistance liquidity levels here, hourly levels mixed in with session levels, and a new week opening gap. I mean, this just looks like a very good entry for me, to be completely honest. I mean, I would take it again. So like I said, I don't mind sizing up and taking this loss on the size up. So once we put in this 5 minute SMT, I told myself, okay, let's drill down to the 1 minute and see what we got here. So if I pull up the 1 minute here, this is today. Let me get back to yesterday. What we have also at open is NQ put in this fair value gap here. So I would have liked to see this 5 minute fair value gap get respected. And let's see, let me find where my entry was. So this is where we come down, we put in a retrace. This is where our 5 minute SMT level was put in. So once we put in this 5 minute SMT, we're respecting 5 minute order flow bearish still. We have 3 SMTs. I see a good reaction out of this on the 1 minute. Out of this 5 minute fair value gap, I entered here, risked high of day. Now, the reason that I put my risk at high of day is because there was news at 10 a.m. I believe it was manufacturing news, maybe Jolts. Not sure off the top of my head, but it's news that very well could have spiked up and wicked out a stop that was, anywhere, from the body of this candle to this high or anywhere in this area here. Very well could have wicked and stopped us out. So entered in small size on this reaction, and then I waited until news. Let's see, we'll see the 10 o'clock spike. And the price just ended up chopping. And as the price developed, I did not like at all how many times this 5 minute fair value gap was tested on NQ. Really would have liked to see it bounce in there once, maybe twice, and then give us a strong push. But so we can see at 10 o'clock, we get a big spike up. And then to me, we get this reaction. What this looks like is this candle closes, and then immediately this candle is super bearish. So I entered in on this bearish candle, a little bit more size. And what I did was I moved my stop to the top body of the 5 minute candle, I believe. Yeah, this top body of the 5 minute candle. A little bit above this high and these relatively equal highs. And then because ultimately we could have ended up coming and sweeping out these 1 minute lows and then moving lower. And I do not want to leave my stop up here because this news candle gave us a good level to set our stops at. And if once price comes up into this gap for a 4th and 5th time, it is more indicative of that we're not going to respect that level, that fair value gap. I mean, if like I said, once or twice, respect on a 5 minute fair value gap is good to see. But once we start testing a 5 minute fair value gap for 20, 4 or 5 minute candles in a row, 20 minutes worth of 5 minute candles in a row, that is just not what we want to see. So, like I said, I entered in more, moved my stop down to the top of this 5 minute body candle, and ultimately ended up getting stopped out. Now, like I said, I would take this trade again every single day of the week. I mean, just a lot more draws to the downside, better draws on liquidity. That's what we base our initial bias off is where are the more strong draws on liquidity? Where are the most prominent draws on liquidity? And they were short on. We had all these levels in Q, as opposed to this next hourly level on ES, which ended up getting taken out. But I would take this trade again on NQ. It was a larger loss at the time. I thought once I took it, I thought, well, I would do it again. I'm not upset at it at all. But once I logged off, I thought about it into the evening a little bit, and that is, even though I would take this trade again, it was still on my mind. So that's just something that I had to reflect on. Part of growing pains, I suppose, of sizing up, but also indicative of maybe something else going on. If a trade is still bothering you after you log off the charge later into the evening, then there's probably something else that needs to be addressed. So I came into today very, not gun shy, but very aware that I sized up and took a larger loss yesterday, and I was not going to go full tilt mode today and blow an account. But ultimately, I did not end up taking a trade today. And, this is something that I'll continue to learn from. Maybe should not have sized up, doubled my size for the first trade that I've taken in a long time, because price action in holiday price action has been slow. But we had 3 SMTs lining up, 5 minute bearish order flow, came up into a fair value gap, reacted out of it, disrespected 1 minute order flow when we inverse this gap here. So it could have very well entered here and, set a stop accordingly. But I waited for news, waited for the news candle to spike up, get a big bearish push out of it, entered on the bearish push, even though it ended up closing bullish, and then just almost immediately got stopped out 5 minutes later. Not even. Yeah, 5 minutes later. But would take the trade again. As I said, I'm not upset at it at all. Just gonna have to move forward, not being gun shy and just continue to trade how I trade. All you can do is respect our edge, respect the edge that you identify, and continue to put, risk on the table. But that was today's trade recap. Thank you.